Hi there, this is Mike Durr, Kingwood Mortgage Guy, and I am here with a talk about the 15 questions that every first-time homebuyer needs to ask. So what I'd like to do, I'd like to get started right away. First thing is, my name is Mike Durr. I call myself the Kingwood Mortgage Guy, and one of the things that I like to share, let me just make sure I can do this real quick. That's hilarious. Okay. So who is this guy talking about mortgages? Well, first off, I've been a Houston resident, if you call Kingwood Houston, for the last 35 years. I've been in the mortgage industry for 28 years. I've been an underwriter, I've been a loan originator, I've been a branch manager, and I've done just about everything that you can do in the mortgage business. On top of that, I've bought and purchased and sold about 30 to 35 houses. Most of those were investment properties. I currently have two or three homes that I'm either leasing or vacation rental, and I've been serving people about 200, 300, 400. I don't know. I lost count. I don't keep track of that, but I help a lot of people. And most of the people have been very kind to me with great reviews and stuff. So, anyway, that's why I'm here. I've done this a long time. I feel like I can help a lot of first time home buyers. One of the things that my wife and I talk about, my wife's a realtor. Her name's Sandy. We talk about we wish we'd had us when we were buying our first home. And that's a story I'll tell on another deal. I think I've told it before. But anyway, I think that I've got some chops that I can answer most of the questions. So what I'm going to do tonight is kind of a cappello, is we're just going to see what the questions come across. And um, why we're talking about these is these are questions, real questions that people ask us. And a lot of times when a first time buyer will reach out to us, I first thing I'll tell them, I'll say, what questions do you have? And they'll go, well, I'm not sure. And the bottom line is they don't know what questions to ask. So if this helps in any way, I think that that's going to be a good start. So let's get started right here. Most buyers don't fail due to bad credit or bad timing. They just don't know what they don't know. And tonight we're going to go into that. Okay. So let's move on to this. We're going to try to do it quickly too. So why walk through 15 real questions I hear every week? Well, some might surprise you, but I want you to feel free to drop any questions that you have in the comment box, and we'll hit as many as we can, and as long as the time allows. Okay. How much money do I need for a down payment? That's one of the first questions that a lot of people ask, and it depends. And I can say it depends on just about every one of these questions, but there are different options out there. There are Freddie Mac and Fannie Mae options that go down to 3%. Actually, there's some Fannie Mae programs that actually offer you money. And in that case, I recently did a 1% down on a Fannie Mae program. On FHA, there are 3.5% down, and on USDA and VAs, there's zero down. On top of that, there are FHA loan programs that will give you a grant. So not only do you get the money for the down payment, but you get some money towards your closing cost. So there are just a tremendous amount of options for people if money is the issue. So it's not 20%, it's usually under 5%, and in many cases, sometimes it's zero. So that's a quick and short answer for that. Can I buy a home with bad credit or no credit history at all? Well, that limits you. Having no credit at all, there are just a few entities out there that will allow you to do a loan with no credit. VA is one of them. FHA is another one. When you do that, you're put into a box where the credit is perceived to be maybe on the worst case scenario, and the pricing's not as good. So what I generally do with customers like that is I show them how to get excellent credit scores very quickly. So that's something that if you have an issue like that, it'd be a good idea to call me or reach out to me. You're going to have an opportunity to sign up for a meeting with me. And I prefer that we schedule that, and let's take advantage of that. Okay. So credit score is a big deal, but it's not the last thing that you need to worry about. So how much house can I afford? Let's unpack that a little bit. So one of the things that most of the lenders do or the underwriters look for is a debt ratio that is consistent with what they've learned that people can afford. And if I just say 50%, then I'm almost right all the time. And what that means on this slide, what you're going to see is you see the income on this one, just took an arbitrary number, is $6,000. And that means that you could have total debt, including your mortgage, of $3,000. So 50% of debt, and that includes your car, your credit cards, your student loans, anything like that, and your mortgage would add up to no more than $3,000. Now, that's being kind of fuzzy, and it's not exact because on FHA you get up to 55%, or maybe even 55.99 anyway. And on conventional, it may be a little less. It could be below 50% or 45%. So definitely, if you're in that range, to find out how much you can afford. That does not always indicate how much you can afford because there are so many additional things to go into it. But that's a good shoot from the hip number, if that helps. What's the difference between getting pre-qualified and pre-approved? Very simple. When you get pre-qualified, basically what you've done is you filled out an application. You put on there where you work, how much you get paid, how long you've been there, where you live, how long you've lived there, how much you have in savings, and you've basically put that on a document that is the application. That you can get pre-qualified with just that information and a credit pull. The next level, though, is being pre-approved. And pre-approved means that you have given documents, W-2s, paycheck stubs, bank statements, savings account, identification, and proven that the information that you put on your application is correct. Now, this makes sense to a lot of people. And what we don't want to do is we don't want to send you out with a pre-qualification and start looking at houses when in fact you may have misinterpreted how people calculate or underwriters calculate the payroll. And you may have given us how much you receive each month, not your gross income. So one of the things that happens is a lot of people understate their income, and that limits them if you just do a pre-qualification. And I don't like to do just pre-qualifications. I like them with the docs. That way we know for certain we're going to be okay. All right. That's a good question. No, we get that a lot. That's a big question. Why do you need these docs? On this screen, I've got a list of the documents that you need. And of course, obviously, if you would like that information, you can sign up to meet with me and we can go over that specifically. What type of mortgage is best for me? FHA, VA, USDA, or conventional? Well, that depends, and it depends on a lot of things. First off, it could depend on your credit score. And I have kind of like I'll tell you how I do it. If somebody is 700 FICO and above, I usually lean towards the conventional loans. It's not 100%, but that's the way I lean. If it's below 700, I tend to aim at FHA. But what happens is, what we do is we'll qualify you and show you what FHA looks like and what conventional looks like, and let you decide which one seems best for you. That's what we think is the best way to do. I'm all about giving you the options, explaining what the differences are, and then show you what the rate options are for each one of those programs and how it might affect you over the course of 5 to 7 years. Does that work? If so, let's get in touch with each other. Big question here. What are closing costs and how much should I budget for them? Well, let's talk about that. So closing costs, it's not your down payment, even though it could be, that would be considered closing costs because that's your down payment. But the other things that I'm thinking about are your lender origination fees, or the third-party fees that are like your credit report and your appraisal and the doc prep and other things that are mandatory for you to get when you're going through this process. And then finally, there's the title fees that basically confirm that the person selling the property has the right to sell that property with a clean title. All of those are fees that are encumbered when you're doing the loan. Is encumbered the right word? I don't know, maybe so. Anyway, I estimate that it usually represents about 3% of most loans. Oh, I forgot, the tax and insurance escrow. If you choose to have a tax and insurance escrow account, that's another cost that 3% will cover. And what we do is we try to price our loans so that you get the option to get the raw pricing on the interest rates, paying discounts, and are paying so that the originator can also do the loan and the lender can pay for that. Now, when we're talking about closing costs, we have to talk about seller contribution towards your closing costs. And I see this on about 50% of the loans that I do, is that the seller, because of the negotiation of a very shrewd realtor, will end up paying for your closing costs. So in some cases, you don't need anything but your down payment. And that, my friend, is a win. So definitely something that we should talk about and how to negotiate that. There are specific scenarios that make that very easy to do. Good. All right, what's the current interest rate and how does my credit score affect it? Well, let's just make it real simple and clear. If you have a high credit score, let's say 740 and above, could be even 780 and above, you'll get the best interest rates, or the option to get the best interest rates. If your credit score is low, you're going to get less than the best interest rates. And right now, I closed a loan today, and the interest rate on that one was, on a conventional loan, 5.5%. That was the kind of like the middle road. And we like to talk about rates, but you'll find that working with brokers is consistently better for getting the best rates and the lowest fees. And we like at Kingwood Mortgage Guys, we like to think of ourselves as very transparent and give you the option to choose which path you want to go. If you have plenty of money, then the discount points could potentially be the best rate. Rates are going down. They seem to be going down. We expect them to move down consistently. That would maybe debunk that idea of maybe buying discount points and just getting what the best rate is. So a lot to talk about on that. Credit scores are critical. Loan to value is another thing that we calculate in there. The higher amount of money that you put down, a lot of times you get a little bit better rate. All right, let's see what's next here. All right, well, here is the form, and there is a QR code on there. When you put your phone and put it on camera and put it up to that QR code, it should surround that with a little yellow box. You click on that, and it'll take you to my appointment booking thing, whatever you call it, calendar. And so I'd love for you to schedule an appointment with us. We'd love to talk to you and just find out what specifically you have options on. We like options. So hopefully you've taken a minute and you've got the time to do that. Yes? Enough time? There'll be another one just in case. So I'll do that again. All right. Can I use gift money or down payment assistance programs? Well, let's talk about that. Gifts, absolutely. You can do gifts from, usually they like them to be from family members. They can be from a person that you're have been a long time friend and you can prove that. They can be from fiancés. So if you're not quite married but you're going to be married and your fiancé gives you a gift, that works. Down payment assistance programs. I mean, that's one of the ones that's out there that's available for just about everybody. Now, some are just about everyone, not all of them. Some of them are income-based, and it's not what you think. It's actually, you can make too much money for some of the income-based ones. So that's one of the things. Of course, USDA is one that you don't need any money for. 401k withdrawal. If you've been on your job for any length of time and you have a 401k, you can borrow money from your 401k for a down payment and without any penalties. And that's something we see a lot. Here's one that a lot of people don't think about is selling something. You can sell, and I've had people sell automobiles, tractors, all kinds of stuff that has been sitting. Maybe they're not using it. Maybe it's just it's something that they've kept and they inherited or whatever. You can sell that. There's some specifics in the details of what you have to show that what you actually sold it for. Was it a reasonable price? That kind of stuff. But we can guide you through all that. I think it's a great idea if you have some stuff. At my house, we call it junk, but if you have some stuff, then that would be a great thing to look at to see if you can sell some of it to increase the amount of money that you have for down payment and possibly closing costs. All right, what's next? What's included in my monthly payment? Well, the answer is right there. The principal of the loan, the interest on the loan, the taxes is not always on the loan, and the insurance, but you always have to have where you're going to pay real estate taxes. And in the state of Texas, what happens is the county and the school district appraise the value of your house. What usually happens is the county puts in a value on your house. The school districts usually use that appraisal value, and they each have a percentage of tax that they collect on your house and for each entity, so that we support the school district and the county, and you pay that each year. It's annoying and it's not inconsequential. Most people, I think, would roll that into their mortgage payment so that included with your mortgage payment, you're paying 1/12 of the taxes, 1/12 of the homeowner's insurance every month. You could also be paying mortgage interest or private mortgage interest. Private mortgage insurance. That's what I'm trying to say. For some reason, it just didn't want to come out of my mouth. Maybe it's because I don't like private mortgage insurance, but if you're putting less than 20% down, they're going to pay it. That's a whole separate talk about FHA and conventional too. But that's basically it. You look at your principal and interest, then the taxes and the insurance are considered part of your mortgage payment. And that's what keeps if you do it with the escrow account, when you make your payment, the mortgage company will get the bill from your taxing authority and the school district, and they pay it. And your homeowner's insurance, that will go to the mortgage company, and again, it'll be paid by the mortgage mortgage entity servicing department, because you've been putting that money in their escrow account every month for the last 12 months. Okay. All right, moving right along here. How do you know if I'm overpaying for a house? Well, that's an interesting one. I've got a little story I'll tell you on that. When Sandy and I bought our first house, this was it was many years ago, like a handful of decades. Anyway, it was a house in San Antonio. It was a cute little house, and we paid $37,500 for this house. And I told her when we bought it, I said, honey, we are never going to be able to sell this house for what we paid for it. We paid too much. Well, fast forward 4 decades, and what I find is that same house, 1,400 square foot frame house that I bought for $37,500 is currently, or sold this last year, for $425,000. So when you think you're overpaying, you might not be in that case. But here are things to look for. The market, the way the market's going, sometimes prices are up, prices are down. Today, this is a very good time to buy. The market is down. It's definitely a buyer's market today. Your realtor should be able to help you with some data that would support why this would be a good time to buy, or maybe why it's not a good time to buy. It may not be a good time to sell, but it may be a really good time to buy. That's kind of tough for people that are trying to sell or need to sell. The other thing, like I didn't follow my guidance, your gut. What is your gut feel about this? Are you paying too much? Well, if I'd have gone with my gut, I wouldn't have ever bought that house, and we wouldn't have benefited. We didn't, keep in mind, I didn't sell that house for $425,000. I sold it for $75,000 after 6 years. I doubled our money in 6 years on that home. And I'm mad at myself because I sold the darn thing. The other thing is you might get input from your family or your friends and just ask them what they think. Now, I'm not going to tell you that your friends are always going to give you the perfect advice, or your family for that matter either. But you want to do some checking. And the one thing about real estate, it has consistently appreciated year after year for at least the last 80 years. There's only a couple times over the course of the last 80 years when real estate went down in value, and it's recovered every time. So real estate's a pretty good investment, and that's one of the things I think it's hard to make a really bad deal. Now, don't get me wrong. Depends on how long you're going to live there. That's a factor. But you have to get good people around you. Get a good realtor, good mortgage person. They can help you. Should I buy now or wait for prices or rates to go down? Well, I get that question a lot. It's been a question that people have been asking for the last 2 or 3 years because rates have gone up from where they were historic lows. And the ideal is that if you buy a house today, even when rates are up a little bit, now they're down from the highs, but you can always refinance that house into a much better mortgage. So if you find that perfect house, I would not wait. I would buy now. And particularly this particular time, we're in the middle of November. Well, we're almost in the middle of November. And this is a soft period for selling houses. No, normally November, December are not great booming months for selling houses. So there are people out there that have had their property on the market since the summertime and they haven't sold. And those are people that are willing to talk to you and give you contribution and discounts. And I've seen amazing opportunities for people that just the timing is really good right now. So I think that this would be a really good time. All right, let's move on. How long does the whole process take from offer to closing? So I would say well within 30 days. We average about 21 days on our deals, and we have done them as fast as 8 days. I would say between 14 and 21 days it takes to go through this process. But many times it's faster than you think. And usually the ones that really want to close fast are generally the sellers. So that could be an inducement to them to accept an offer that might not be at full value. It may not. Click there. Okay. So what happens after my offer is accepted? Well, after the celebration, because that's usually a good time, the next thing you do is you do the inspection. The inspection is a critical part of buying a house, and I can't recommend, or I can't emphasize how strongly I'd feel about the inspection in multiple ways. But after you get the property inspected, we're going to send the loan to loan processing. There's also, I left one out in here, when you go under contract, we're going to send you a disclosure package. And the disclosure package is basically giving you a group of documents that a lot of it is fluff, but the key one is it gives you a first time look at what the cost of buying the house is. Very important. And don't know about everybody else, but I like to go over it with my customers, my clients, when that goes out so I can explain it, because they're not always easy to read. Anyway, do the inspection, you sign the disclosures. We, at that point, are able to order an appraisal, and it's always good to order that appraisal early, but you don't want to order the appraisal until after you've been through the inspection and made sure that there's no more negotiations on the price after the inspection. Anyway, we get into loan processing, we do the appraisal. Once the appraisal comes back, the underwriter is going to look at it. Actually, the underwriter is going to look at it before the appraisal gets back, and they'll condition a appraisal. When the underwriters look at it, they're going to go and they're going to look at your income, they're going to look at your assets, they're going to look at the debt ratios, all the things that make up a loan, and they're going to bless it and say it's clear to close. Those are words that we love to hear in the mortgage industry. You're clear to close. So that's a good time. When we go to closing, go to the title company, you pay whatever money that you're paying, and they give you the keys after you've signed about 75 documents. So it's pretty easy as long as we've pre-approved you in a proper manner, which we generally do. Okay. Do I really need a home inspection? Well, yes, because first thing on homes, you just can't really tell what's going on with the home unless you're a construction person. That might be the only people that I tell that maybe not need to have an inspection because they already know where to look for things. But it checks the roof, it checks the foundation, it checks the electrical, it checks the plumbing, it checks for all the systems, it checks for the appliances. And really, it's one of those things that you just don't want to spend that kind of money on a property that might have big problems. And I think one of the key things is the $400 to $500 to $600 that you pay for an inspection. You will usually get back multiple times in the negotiation when you go back to the seller and you say, Mr. Seller, I know I really like your house, but we've got these issues that the inspector pointed out that we think need to be fixed before we buy this house, or we're going to walk away. And that's very strong inducement for the seller to either fix the problems and or to give you money so that you can fix the problems, which I think is a preference. Okay. So what are property taxes and homeowners insurance, and how do they work with my loan? I talked about this a little earlier when I was talking about debt ratio, but the property taxes in Texas are not inconsequential, and they usually average between 2 and 3% of the value of the property. So let me break that down for you. On a $400,000 property, if it's 2.5%, I think that is about $10,000. So $10,000 divided by 12 is about 800 and something dollars. And that would be added to your mortgage payment every month. Now, when you get a homestead exemption, that reduces the percentage of the homestead exemption, or reduces the valuation or the amount of percentage that you pay. Don't want to confuse you on that. But it is something that we have to add in there. And of course, the appraisal values, we've been fighting for them to go down. I have a whole list of little tips and tricks that you can do to keep your appraisal down. I use them myself and they work for me. Also on the homeowners insurance, another thing, homeowners insurance values have gone up. The prices of the policies have gone up. Another battle that we fight, and I have some ideas on how to keep that as low as possible. So love for you to get in touch with me through the QR code. We'll schedule a time and we can talk about that when the time's right. All right. But taxes and insurance, they're a big part of your mortgage payment. All right. Here's a QR code for reaching out to me and getting in touch. And again, you just put your phone up to that QR code. It should be big enough, I hope. If it's on your phone, it may not be. Obviously, I am the Kingwood Mortgage Guy. You can find me online. I always encourage you to search for Google for mortgage lenders or Mike Durr or Kingwood Mortgage Guys. One of the things I like to talk about, and because I'm very proud of them, is I've got 120 5-star reviews. People seem to like me. At the end, it's because I'm transparent. I tell them the truth and I serve them pretty well. We've got a good team that helps the people that we work with. So again, kingwoodmortgageguys.com. If you don't have a camera or the QR code is too small, I'd love to talk to you. And so let's see, I think that's it. So let me just see if there's any questions here. If there are. Don't see any questions. So I'm done for the night. Listen, I really want to thank you for spending the time to go over this information with me. Hopefully it was helpful. I love to help you and I'd love to talk to you. So if at all, you can call me. The office number is 281-348-9899. Again, Kingwood Mortgage Guys and kingwoodmortgageguys.com. All right. Thanks a lot. Talk to you soon.